Hello, everyone, and welcome back to another episode of Financial Market Insights for Traders. I'm your host, Sophia, and today we're diving deep into a topic that every aspiring trader, and even some experienced ones, should really understand inside and out: the Forex market. If you've been curious about how currency trading works, how people make money from it, and which currency pairs are the best to focus on, you're in exactly the right place. This is going to be a full breakdown, a proper Forex trading explained for beginners session. But don't worry, even if you've never placed a single trade, you'll be able to follow along. And for those who want to take action after listening, I've got two resources for you later in the episode: a world class, cutting edge, user friendly trading platform app you can start using right away, and a beginner friendly financial markets podcast series that's packed with trading insights. I'll give you those links as we go, so stick with me. What is Forex trading? Let's start with the basics. Forex, short for foreign exchange, is the global marketplace where currencies are bought and sold. And when I say global, I mean it. This is the largest financial market in the world, with over $6 trillion changing hands every single day. Here's the first thing to understand: currencies are always traded in pairs. That's because you're exchanging one currency for another at the same time. For example, euro to US dollar represents the euro versus the US dollar. If you think the euro will rise in value compared to the dollar, you'd buy the pair. If you think it will fall, you'd sell it. And unlike stock trading, which happens on centralized exchanges like the New York Stock Exchange, the Forex market is decentralized. Trades happen electronically through a network of banks, brokers, and institutions around the world. Why do traders love Forex? So why is Forex so attractive to both beginners and seasoned traders? Let's go through the top reasons. First, liquidity. With trillions traded daily, you can enter and exit positions almost instantly. No getting stuck in a trade because there's no one on the other side. Second, low barriers to entry. You don't need a huge account to get started, and many brokers offer free demo accounts so you can practice. Third, leverage. This lets you control a large position with a small amount of capital. For example, with 50:1 leverage, a $200 deposit can control $10,000 worth of currency. Of course, leverage cuts both ways. It magnifies gains and losses equally. Fourth, 24-hour market access. Forex runs from Monday morning in Asia through Friday evening in New York. That means you can fit trading around your schedule, whether that's early morning, late night, or somewhere in between. And finally, there are opportunities in all market conditions. You can profit from both rising and falling prices. What moves currency prices? Currency prices are influenced by a mix of economic and political factors. Think of it as a constantly moving puzzle. Some of the main drivers include economic indicators like GDP growth, unemployment rates, and inflation. Central bank policies. When the U.S. Federal Reserve or the European Central Bank changes interest rates, markets can move in seconds. Geopolitical events such as elections, wars, and trade agreements. Market sentiment. Are traders feeling confident and optimistic, or cautious and risk-averse? There are two main ways traders analyze these movements. Fundamental analysis looks at the big picture factors, like those I just mentioned. Technical analysis focuses on price charts, patterns, and indicators to predict what might happen next. Best currency pairs to trade now. If you're new to Forex, don't start by trying to trade every currency under the sun. The smart move is to begin with the major pairs. They have the most liquidity, the lowest costs, and the most stable price behavior. Let's go through them. Euro to US dollar. Euro versus US dollar. This is the most traded currency pair in the world. It's ideal for beginners thanks to tight spreads and smooth price action. It's influenced by both Eurozone and US economic data. Pound sterling to US dollar. British pound versus US dollar, known in trading slang as cable. More volatile than euro to US dollar, which means bigger potential moves, but also bigger risks. Sensitive to UK economic reports and political developments, especially since Brexit. US dollar to Japanese yen. US dollar versus Japanese yen moves are often linked to US Treasury yields and interest rate expectations. Favored by trend traders who like long, sustained moves. Australian dollar to US dollar. Australian dollar versus US dollar correlates strongly with commodity prices like gold and iron ore. Influenced heavily by the Chinese economy, since China is Australia's largest trading partner. US dollar to Swiss franc. US dollar versus Swiss franc. The Swiss franc is a safe haven currency, which tends to strengthen in times of global uncertainty. Beginner tip: stick to these majors until you've built experience. Exotic pairs like USD/ZR or Euro/TRY might look exciting but come with higher transaction costs and unpredictable moves. How to start trading Forex. Step by step, all right. Let's talk about the practical side. How do you actually get started? Step 1. Learn the basics. You need to understand concepts like pips, lots, leverage, and margin. A pip is the smallest price movement a currency pair can make, and it's how we measure gains and losses. Step 2. Choose a broker and trading platform. This is critical. You need a platform with fast execution, reliable data, and an intuitive interface. For a world-class, cutting-edge, user-friendly trading platform app, I recommend checking out crystalballmarkets.com. Whether you're brand new or already trading, this platform is designed to give you the tools you need to execute efficiently. Step 3. Use a demo account. Practice without risking a single dollar. Treat it like real money so you develop good habits. Step 4. Develop a trading plan. Your plan should outline what you'll trade, when you'll trade, your risk per trade, and your exit strategy. Step 5. Start small. Trade the smallest position sizes available until you've proven you can be consistent. Risk management, your trading safety net. I can't stress this enough. Risk management is everything. Even the best traders lose trades, but they control the losses so they can keep going. Here are the golden rules. Risk no more than 1 to 2% of your capital on a single trade. Always use stop-loss orders. Be careful with leverage. It's a double-edged sword. Don't let emotions like frustration or excitement dictate your decisions. Think of risk management as the brakes on your car. You might not need to slam on them every trip, but without them, you're heading for trouble. The psychology of trading. If you ask experienced traders what separates the winners from the losers, a lot of them will tell you it's psychology. The two big emotions are fear and greed. Fear makes you exit good trades too early or avoid taking them at all. Greed makes you take oversized positions or overtrade. Successful traders learn to treat each trade as just one of many. They follow their plan and don't get attached to any single outcome. Common beginner mistakes. Let's quickly highlight a few pitfalls to avoid. Overtrading, taking too many trades without high-quality setups. Ignoring major news events. Interest rate announcements can move the market instantly. Jumping in without confirmation. Patience pays. Trading without a plan. That's basically gambling. Level up your knowledge. One of the best ways to grow as a trader is to keep learning. Books and courses are great, but podcasts are an underrated gem because you can absorb valuable insights while commuting, exercising, or cooking dinner. For beginner-friendly trading, investing, macro, and financial markets podcasts, I recommend the Crystal Ball Markets podcast series. You'll hear expert interviews, market breakdowns, and strategies explained in plain language. Final thoughts. Forex trading is exciting, dynamic, and open to everyone, but it's not a get-rich-quick scheme. To succeed, you need education, discipline, risk management, and the right tools. So here's your action plan after listening today. Start learning and practicing. Focus on the best currency pairs to trade. Keep your risk small and your emotions in check. Use a world-class platform like crystalballmarkets.com to give yourself a trading edge. Keep growing your knowledge with resources like the Crystal Ball Markets podcast series. Remember, trading is a journey. With the right mindset and preparation, you can navigate the world's largest financial market with confidence. I'm Sophia, and this has been Financial Market Insights for Traders. Thank you for joining me, and I'll see you in the next episode.